So today we have Mike Irvin, tax principal from SB Partners, here to chat about tips for owning and selling a veterinarian practice. So just a quick intro about Mike. Mike is a chartered professional accountant. He's a tax specialist with over 14 years of experience in corporate reorganizations, estate planning, succession planning, trust, as well as corporate and personal tax returns. His expertise extends to family-owned businesses across a wide range of industries. And Mike really takes pride in being a trusted advisor and helping clients with their business and taxation requirements to plan for the future. Did I nail all that?
Yes, you did. Thank you. Appreciate that intro.
So, Mike, starting a veterinarian practice, what are some of the considerations? Can a veterinarian incorporate their practice?
Yes, in Ontario, a veterinarian can incorporate their practice, but they have to be a licensed veterinarian and they have to practice veterinarian medicine. One of the key things to note, though, is if you've already started your practice as an unincorporated business, there's some tax elections forms that you need to file to make sure that the transition from an unincorporated business to an incorporated business is tax-free.
Right. So if you're coming out of school and you just graduated as a veterinarian practice, would you recommend speaking with an accountant after that, or?
Yeah, absolutely. So usually if you're just coming out of school, you probably have some sort of connections. You probably did some co-ops or something like that, worked with somebody that's actually in the industry. So I definitely recommend you talk to them, see how they did it. But having a good accountant and a lawyer to help you set up everything is always best practice.
Awesome. And so let's say this veterinarian is now, a few years into their practice, their life has changed, and now maybe perhaps they're married. Can a spouse hold shares in a practice, a veterinarian practice?
So unfortunately not. So the only shareholders of a veterinarian practice have to be actually licensed. So they have to actually receive the license from the Ontario College for Veterinarians. So I think it's actually called CVO, College of Veterinarians of Ontario.
Okay, good to know. And so can veterinarians have a holding company within their vet clinic?
So yes, you can.
Okay.
But the shareholders of that holding company also have to be licensed veterinarians in Ontario. And again, if you started your practice in just a regular PC and down the road feel like that I want to have a holdco, as maybe it makes sense, there's tax election forms again that you have to file to transfer the operating company underneath the holding company.
And those who aren't familiar maybe with the holdco, can you just maybe give a quick summary of what that means?
It's kind of just another entity on top of your PC.
Got it.
So it's just basically two separate corporations, kind of. The parent company, which is the holding company, would own 100% of the shares of the operating company.
Right. Cool. Are there any restrictions to what a veterinarian can call their professional corporation?
There actually is a lot of naming restrictions, so that's why we always recommend that you work with a lawyer for incorporating the business, just to make sure all those restrictions are actually followed. But a couple of them is, one, you need actually permission from the college before you incorporate. You have to have professional corporation at the end of the name. The name actually has to include veterinarian medicine. And you have to include the surname that's actually on the register in the name as well.
Wow. Okay. So there's a lot of steps that you need to follow before opening that PC.
Yeah. But that's why I always recommend, if you're working with an accountant and a lawyer, have a good team behind you, then they'll make sure that you have all the proper steps in place.
Excellent. Okay. So when should a veterinarian, or how should they choose their year end?
That's actually a good question. Some people get confused on it. So the start of the first day of the incorporation is actually the date of the incorporation.
Okay.
And then you can choose any time within 53 weeks, whatever year end that you want.
Okay.
However, if you're actually in a partnership in Ontario, you actually have to have a December 31st year end.
Okay. So just for clarity, a partnership would include multiple veterinarians that are part of that business.
Yeah, exactly. So if you're operating as a partnership, so if you're operating with somebody else,
right,
as opposed to just yourself, you would need to have a December 31st year end.
Gotcha. Okay. And okay, so now, we've established these first few things. Now, bookkeeping, how important is that? Does a veterinarian need a bookkeeper?
So a good bookkeeper or a good accountant will save you money in the long run.
Yeah.
But the important thing is that whoever's managing the records should be properly trained. The reason is because if you have somebody properly trained doing the books and records, the shareholder will be able to be involved in the business financially a little bit more. And you'll be able to make snap decisions when you need to.
Right. Okay. And can a veterinarian invest excess cash received from operations in the professional corporation?
Maybe.
Okay.
And the reason why I say maybe is there's actually, my recommendation is actually no. You shouldn't, because there's better alternatives.
Okay.
But the issue is that the bylaws of the company actually say that you shouldn't be operating a business that is not the practice of veterinary medicine.
Okay.
So the question is investing a business? For tax purposes, it could be.
Right.
So you might actually be offside.
Right.
But as
okay.
I tried to allude before, we recommend that you either invest in the whole co, the excess cash in the whole co, or even better yet, talk to your accountant or SP partners and spin it off into actually a new sister company.
Okay, cool. So just like for my own clarity here, so as in a case example, so a veterinarian is practicing, and is it like perhaps the situation would be like they inherited a lot of cash, or their business is producing a lot of income, so they have all this excess cash? Like, what would be kind of a situation where this would be applied to?
Yeah, it's when the business is actually successful, right?
Okay.
So as it generates more revenue, right? You might be able to accumulate more cash inside the corporation that you don't need for your personal funds.
Right.
Right. So that cash itself, if you just left it in the business, isn't really doing anything.
Right.
So best practice, or just an optimal situation, you probably should invest it.
Right.
So I would suggest that you actually remove that cash from the operating company and then invest it in a different entity.
Right.
And there's ways that we can structure that so you can do that tax-free.
Right. But moral of this story, don't invest in your operational company.
Yes.
Got it. Okay. So back to that spousal question. You're married now. Can you split your income with your spouse?
So the answer is yes.
Okay.
But you have to have the proper structure set up from the beginning. Because if you recall from one of the original questions or the previous questions, only licensed veterinarians can actually have ownership of the PC or the holding company. So there's a transaction and steps that you can take to actually spin the cash out first to another entity.
I see.
And so I suggest you actually sit down and discuss that with your accountant or SP partners.
Right. Now, can a spouse work for your company, your veterinarian practice?
Yeah, absolutely. Yeah, so they can work, and then you can pay them salary based on the reasonable work that they've been doing in the corporation.
Yep.
That's one way to split income too, as long as they're actually working in the practice.
Right. Okay, great. And should a veterinarian hold personal use assets inside their holding company?
Never.
Okay.
Never. You should never have any personal use assets inside the corporation. The reason is because it's a separate entity. So if you do have personal assets inside the corporation, there could be a taxable benefit deemed to be the shareholder.
Okay.
And that taxable benefit depends on the value of the benefit.
Okay.
So it's negative tax consequences to have a personal use asset
Okay. So
inside the corp.
So don't hold anything in the holding company.
That's personal use.
Personal use.
Yeah.
Got it. So personal use could be like your house or
exactly.
like a car.
So car is a little bit different, but mainly sometimes you see that people take loans out to buy a house or something like that. So that would still be considered personal use, personal funds, and you wouldn't want to do that.
Understood. Okay, so can you borrow money from an operating company?
So yes, but you would actually have to repay it within 1 year from the year that we received.
Okay.
So for an example, let's just say you've received a loan from the corporation on December 1st, 2021. You have a December 31st year end. You would actually need to repay the balance of the loan by December 31st, 2022.
Okay.
So it's the following taxation year after the year you received the loan. There also would be deemed interest benefit on that loan. And if you don't repay the balance of the loan by the December 31st, 2022, in my example, it actually would be included in 100% in income in the year that you receive it.
Okay. And that would be the following year.
Yeah. So it's only a temporary thing.
Got it. Okay. So make sure you pay back within the year.
Yes.
Noted. Okay. Going back to that personal assets, personal residence kind of question. So can you use a portion of your personal residence to operate a clinic?
Yes, you can. So we see that often. The only issue is that when you have a personal use asset and turning it into an income generating asset, that's actually a disposition for tax purposes. It's a change in use. So to avoid having some negative tax consequences or reporting the disposition, there's some election forms that you need to file. And actually vice versa, there's going from an income producing asset to a personal use asset. That's also a change in use and a disposition for tax purposes. So there's some election forms that you can file to defer that gain as well.
Got it. Okay. And are there any tax breaks for selling shares of a professional corporation?
Yes, there is. So if the shares of the PC actually qualify, you can defer for a sale in 2022 anyway, approximately $913,000 of the proceeds.
Okay.
Now this amount is actually being increased by inflation up until $1 million.
Okay.
So if you end up selling your shares and they qualify, you should be able to get $913,000 exempt.
Oh, okay. That's pretty good.
Now the three, actually, I'll just talk about the three criteria actually for them to qualify. The first one is that the veterinarian needs to hold the shares 24 months prior to the sale.
Okay.
Second one is that 50% of the assets need to be used in an active business, primarily carried on in Canada. And the last one is at the time of sale, 90% of the assets need to be used in an active business.
Right. So,
and the second test, sorry, I forgot, it's a 24 months prior to test.
Got it. So I guess like if a veterinarian is now considering retiring down the line, they need to keep this into consideration to say, okay, I need to hold on to these shares even if I want to retire in 5 years in order to have this tax exemption. Is that correct?
Yeah, it is correct. I would say best practice, though, would be to always keep it pure. So one of the things that actually puts you offside this is excess cash or marketable securities.
Okay.
So they could, if you have too much of that inside your PC or your holding company, you actually might not be able to take advantage of this benefit.
Okay.
So that's why there's better structures out there where you can actually remove the cash prior to you actually selling.
Okay. And how often should you be reviewing your corporate structure for your professional corporation if you're a veterinarian?
I'd say it should be on an annual basis. You should always be reviewing it with your an accountant to make sure that the structure fits your objectives, fits your current objectives, fits the market, all the tax plans that are available to you. So it's always sit down and have a good team with you.
Right, totally. And okay, so going back to this retirement question, you now have kids, they've gone to school, they've become veterinarians, they want to take over the practice. How does that scenario go? Can you just pass on your practice to your children?
Yeah, so you can actually. You can sell your practice to your grandchild or child as long as they are actually licensed veterinarians.
Right.
And actually there's some new rules that actually just recently came into place where you can actually sell your practice to one of their kids or grandchild's holding company.
Okay.
And what that'll do is it'll actually allow them to use corporate funds to actually facilitate the buyout. And assuming that your shares actually qualify, you would be able to claim the capital gains exemption on that sale as well.
Oh, that's great. Okay. And do you see that a lot in this industry? Is it common for veterinarians to pass on to their family, or do you think it's more common that they're doing external sales?
I would say most likely it's probably external sales.
Yeah.
One of the reasons why is because the new rule that I just mentioned just came in place this year.
Okay.
So it was always more beneficial for you to actually sell to a third party as opposed to intergenerational.
Right.
Before. And you see a lot of big partnerships kind of buying the small little practices now too.
Right. Yeah. Well, especially through the pandemic, we saw everyone was getting new pets and dogs, and so you see the value in this industry and the importance that veterinarians bring, right? So
absolutely, everybody loves their little fur babies.
Yeah. So is there anything else a veterinarian should consider from a tax perspective or starting their practice that you wanted to share, or we can end off on?
I just think it's very important that you sit down with your accountant at the beginning and just talk about and explain your objectives and set up a structure from the start.
Right.
it's not impossible to change your structure, but it's a lot more tax efficient if you start it with the right structure
Right.
at the beginning.
Right. So moral of this, set up your structure early on, as soon as you get out of school, as soon as you start your practice, because down the line, it's much more harder to make those changes and to really reap those benefits. Is that right?
Yeah, absolutely.
Yeah.
Yes.
Well, thank you, Mike. I appreciate your time today. And if anyone has any questions about tax structuring their veterinarian practice, they can definitely get in touch with you.
Yes, thank you. I'm happy to be here.